This is Eric Muada with Muada.com. It is another Rethink video. This time I would like to take a look again at the levels which really make stocks either move up or down. And the levels are 50, 61.8, 38.2, and this is true for any chart, any time frame. Now, there are also other levels which on a future date we'll be discussing are those two levels there, 69.10 and 30.90. But for now, why don't we take a look at these levels here to see how you can take advantage of major moves in the market. The first one here is the Nasdaq Daily chart, and what you see here is we had the RSI showing signs of support on the daily. This line here was showing that there was support here, but what really happened is the market closed the Nasdaq at 50.14. Now the risk here is that now you could either have a bounce off that line, but the risk is if you break that line, which is a break of this trend line here, which is a major break. Two, you're going to be slashing below 50. Also take a look at the fact that the daily had this support line based on these lows here, and so you have the possibility of a break. Why? Because you know that the market closed with the RSI just above 50, and as you move above or below 50, you get major price swings. For example, even on this chart you see that we had a move above 50 here, which corresponds with this major gap up here in the market. So knowing that the market, if you wanted to go short the market with the RSI at 50.14, what you are anticipating here is that the market is going to slash below 50 and break the price trend to the upside. So break that. If you wanted to go short, you're anticipating that, and also you're anticipating now this was a trap because now the market wants to break below 50 and break below the trend line. So would you know that the next day at the very open, the market did exactly that, with the RSI now slashing below 50. And also notice that now the daily RSI also had that break, which is bearish, and you also see that there's a trend break, which is also bearish short term for the market, and all because you knew or anticipated that a break and a breach of the 50 level on the daily RSI would be good for a big swing. Now let's take a look at another level on the monthly this time, and we're looking at a GDX monthly. And what was interesting here is I'd noticed that the RSI had been exactly at 38.20, exactly at that level, and we had been playing this market short ever since it broke down, I think somewhere here. So we've been short ever since this move here, and I think probably even here. So knowing that, and also knowing that now we were at 38.20, add on to the fact that we were now about to break below that support level here, that was another reason to stay short this instrument. Now you know that if you breach and move below 38.20, you're going to have trouble. And that month you see that now we were trading at, after a couple of days of trading, we were trading at 35 or just under 36, and that was good for a market now that was down at least almost 10% at some point. Why? Because you knew that moving below 38.2 would really push this instrument to the downside. Now let's take a look at the opposite of the GDX, which is now the DUSD, and you see that it was up 36%. Why? Because it was breaking out on a monthly chart. Okay, that was a breakout. Now it so happened that our entry point was here under 50 for reasons based on the daily chart. So that was our entry point here. And also notice that the RSI now was moving above here, was moving above 61.8. So that was another reason to stay long this instrument, short the GDX. If you take a look at the weekly, you'll see that there was a cup, handle, and a breakout. And for the week also, the instrument is up about 38%, which is very good. So now, the thing I wanted to sensitize you to is also here on this level, you see that on the RSI, this green line is where this instrument had been struggling. Struggled here, could not hold there, struggled here, and then finally broke out here. And this level happens to be at about 61.8 again, just about 61.8. And once it hit that support level there, then you knew maybe this was different. It was not stalling this time, that the RSI was going to push this instrument to the upside, and that's exactly how we played it. Again, like I said, our entry point being somewhere here under 50. Now, I want to show you one more chart here. And this is not to bash somebody's chart, but this is somebody's chart that I had seen, while making my rounds. And I noticed that they had a cup and handle. Now, they were right because they had a cup, handle, and a breakout. But what really intrigued me is the fact that they were saying wait for the breakout above this level here. So the breakout would have been for the DUSD, your breakout would have been at about 61 and 30 cents. So 61 and 30 cents would be your entry point. Yet if you take a look at our entry point on the monthly level, this is something also investors need to rethink. They need to be using monthly charts more, because the monthly chart gives you a well-defined breakout level, which was the former highest monthly close. If you play the cup and handle on a weekly chart, your entry point is here at 61, above this level here. But yet you really need to rethink and use the monthly chart, because if you use the monthly chart, this is your entry point at 55. Okay, so this is Eric Muatha with muatha.com. I just wanted to talk about that because I noticed that people are still using daily and weekly charts predominantly, when they need to rethink that and go to monthly charts, because they give you earlier entry points. Peace and blessings.